Hey, if you've got a savings account in India, you're going to want to listen up. 2026 is shaping up to be a massive reset for our entire banking system. Starting April 1st, a whole bunch of new rules from the RBI and the Finance Ministry are coming into play, and they're going to affect everything from how you pull cash from an ATM to, believe it or not, what you post on social media. A lot of us are still playing by the old rules, but things are about to change in a really big way. So, the million-dollar question is, how is your bank account going to be affected? We're going to break down all the most important changes for you because even a small misunderstanding of these new rules could end up having some pretty big consequences. Let's start with something most of us do almost every week. First up, there is a huge change coming to a service that millions of us use every single day. UPI-based ATM cash withdrawals. You know what I'm talking about, when you scan that QR code on the ATM screen to get cash out? Well, that convenience is being, let's say, redefined. What you're seeing here is a simple change, but with a really big impact. See, before, you could think of it like two separate lanes. You had your free withdrawals with your debit card, and then you had this other separate lane for UPI withdrawals, which didn't count against your limit. Well, that's over. Now they're all being merged into one single limit. Let's make this crystal clear. Let's say your bank gives you 5 free ATM withdrawals every month. If you pull out cash 3 times using your debit card, and then twice by scanning a UPI QR code, that's it. Boom, you've just used up your entire free limit for the month. Those UPI withdrawals are no longer a freebie. And what happens when you go over that limit? This is the number you need to burn into your brain. For every single transaction after your free ones are used up, doesn't matter if it's with your card or with UPI, you're going to get hit with a charge of 23 rupees plus GST. The big takeaway here, you've got to start tracking all your withdrawals because they're not quite as free as you thought. All right, moving on from ATM fees to something a lot bigger. The government isn't just watching how you take cash out of the bank, it's also tightening the screws on large transactions and, this is the wild part, even your digital footprint. First, let's just define this term, high-value transaction. What is it? It's basically any financial move that's big enough that your bank is legally required to flag it and report it straight to the income tax department. It's not a maybe, it's an automatic, no questions asked process. So what kind of money moves are we talking about? Well, the big one is putting in or taking out more than 10 lakh rupees in cash from your savings account over the entire financial year. And notice, that's a cumulative limit. It all adds up. Paying a credit card bill of over 1 lakh in cash will also get you flagged. So will any single cash transaction over 2 lakhs. Basically, the government wants a much clearer picture of where large amounts of cash are moving. Okay, now this is where things get a little crazy. Starting in April 2026, the Income Tax Department has the power to not just look at your bank statements, but to also scan your social media profiles. In effect, what you post online has just become a financial document. So how does this actually work? Just look at this example. Let's say you file your income tax return, your ITR, and you declare an annual income of 7 lakh rupees. But then you go and post a bunch of pictures on social media flexing a brand new 60 lakh rupee car. The IT department can and will connect those two dots. If the lifestyle you're showing off doesn't match the income you've declared, you can probably expect a notice in the mail asking you to explain where you got the money. Okay, enough of the scary stuff. This 2026 reset isn't all about new restrictions and watching your every move. It also brings in some really powerful new rights for you, the customer. So, let's talk about the good news. If you have a basic savings account, what's often called a zero balance account, you are getting a major upgrade. Banks can no longer treat these like they're second-class citizens. You now get unlimited cash deposits, a free debit card with no annual fee, a free checkbook, and free digital payments. And on top of all that, the RBI is mandating a minimum of 4 free ATM withdrawals every single month. We all know digital fraud is a massive problem, and it seems the RBI knows it too. So from July 1st, 2026, a really customer-friendly rule is coming into force. If you get unlucky and become a victim of a small-scale digital fraud, there is now a clear pathway to get a big chunk of your money back. The most crucial point here is speed. You have to report the fraud to your bank within 5 days. If you meet that deadline, you can get up to 85% of your money back for frauds up to 50,000 rupees. The maximum they'll pay out is capped at 25,000. But
And this is a big but, you can only use this safety net once in your entire lifetime. It's a single lifeline, which means it's more important than ever to be super careful online.
And finally, on customer protection, the RBI is really cracking down on loan recovery agents. The new guidelines are super strict. Absolutely no physical or mental harassment is allowed. Agents can only get in touch with you between 8 in the morning and 7 in the evening, and they're strictly forbidden from calling your friends, family, or colleagues to try and embarrass you. Banks that break these rules are going to face some heavy penalties, including losing their recovery license. Okay, now for a quick update that affects those of you in the stock market. If you're a trader who deals in futures and options, listen up, because your cost of doing business is about to go up. The government has hiked the Securities Transaction Tax, or STT. And as you can see, this is not a small change. Before, if you sold a 10 lakh rupee futures contract, it would cost you 200 rupees in STT. From April 1st, 2026, that exact same trade is now going to cost you 500 rupees. That is a 150% jump that will eat directly into your profits. And it's not just futures. The STT on options trading is also going up by 50%. Now, the good news, if there is some, is that this change is specifically targeting short-term derivatives trading. If you're a long-term investor who buys and holds shares, the rates for equity delivery and intraday trading haven't been touched. So for most investors, it's business as usual. So after all of that, what's the game plan? We've thrown a lot of information at you. So let's boil it all down into a simple 3-point action plan to help you navigate this 2026 banking reset without any stress. Here are your key takeaways. Number 1, actively monitor your ATM withdrawal limit and remember to count both your card and your UPI transactions together. Number 2, make sure your digital life matches your tax returns. Any high-value purchase you show off better have a clear paper trail. And number 3, if you do get hit by digital fraud, report it immediately. That 5-day window is absolutely everything. Look, these changes represent a huge shift in how our money is managed and monitored here in India. From a simple trip to the ATM all the way to our lives online, the rules of the game have completely changed. The end goal is a system that's more transparent and secure, but it also means that we, as consumers, have to be way more aware. So the final question is, now that you know what's coming, are you ready?